Good morning, everyone. Today is the 30th of June. This is Brad Matheny. This is the Plan Your Trade video, and the markets continue to rally. S&P is up almost 0.4% right now. Looks like the markets are moving back into an expansion. Look at all these bullish triggers from last Friday's video. Yeah, I was trying to tell you guys that this market really looks like it has no indication of moving lower immediately. Things could change, obviously, in the future, but right now, let's take a look at the cycle patterns. Cycle pattern is a gap potential in a trending mode. Tomorrow, we have a gap potential in a counter trending mode. Then we have a topping pattern on the second, a gap potential on the third. Friday's a holiday, the 4th of July. Then we move into Bozu trending with a top. Remember, this is in carryover and trending mode, then a flat down, breakdown, and carryover in counter trending mode. We then move into a top pattern on the 14th, a gap potential, a top resistance, consolidation, and an inside breakaway. Now, my cycle pattern low on the July 18th is still in play. We've talked about that many times. Come back over here. This July 18 low right here is still coming into play. It is a peak and a major bottom pattern setting up at the same time. Then we have the October 7th major bottom pattern. Now, I believe that July 18th low is going to be fairly evident down here in the 560 area. So I'm still holding to that, saying that we are looking at some moderate rolling price trend kind of in this area. I think that's very likely the 560, 565 area, kind of an extension of this move here as a pullback, closing this gap. Do we continue to rally? Yeah, probably another 1 or 2, maybe 3% higher here as we move into Q2 earnings. But I think, something is going to disrupt the market, like I've been telling you. I'm not telling you to go short. I'm telling you that right now the markets want to go up. Look, bullish right there. Bullish. Markets want to go up. But I do believe this pullback is coming. The markets just don't go straight up, guys. You should be at this point expecting some type of a moderate pullback after this big bottom and rally before we get into another trend. So, again, I want to warn you that, my opinion is that the markets are poised for a bit of a roll into this October low. Still, maybe double bottoming here, maybe a little higher. I've talked to you about this many, many times. Maybe like this, maybe a little higher, and then rolling into 2026 with kind of a rally. So, again, I've been showing you these same setups for the last 4 or 5 months, telling you that they're likely to happen, in my opinion. And where we're at up here at these ultimate highs, you know, it's a very unusual setup. I'll tell you that. I did a video last week talking about these twinning patterns and how this setup actually took place over here. We're in a very unique scenario. I wish I could give you more information, but these are just the daily cycle patterns and what you should expect. So I did change the color of this. And like I said, I'm going to be moving tomorrow. I have a doctor's appointment in the morning. So I may get a video out to you guys, maybe not. Again, I got to get up and hit the road early. Don't want to get up at 3 in the morning, do a video. But anyway, long and short of it, guys, you got a lot of data here. You're good to go. Remember, July 1st, I'm going to be changing things. I'm still going to be doing videos to try to help you, but I'm not going to be doing these daily morning videos for free. These are really subscriber data, this SPY cycle pattern pre-market stuff. So I'm going to be still talking to you about the market, still sharing my insight, still trying to help you guys out, answering questions. But we're going to, instead of showing you weeks in advance what's going on, like right here, I'm going to be doing pretty much like a weekly recap. We'll look at what happened over the past week and not see what's going to happen in the future. I know that's a big change, but you know, it's just the way it is. My clients pay for this data. You guys are getting it for free. And I started doing this for free because I wanted to prove the validity of these systems in my research. So, it is what it is right now. Okay, now let's move into gold. Gold and silver, I think, are moving a bit higher. I'll be honest with you. If I come back over here on like a 4 hour chart, I'm always honest with you, but it's hard to see this on a 4 hour chart. Let me go to daily. In fact, let me come back over here and go to gold. All right, I got my zigzag indicators running. Okay, so where we're at with gold here on a daily chart is I'm seeing this setup coming. I'm seeing this rally, rally, pause, rally into the flag. Okay. And that's really what I believe is setting up here for gold. I believe what we're looking at is kind of a consolidated wedge type of formation. I believe we're looking at an A, B, C, D, E moving higher. I believe gold may move up like this, stall a bit, and then break. But this is what I see happening in gold. I see this large flagging formation moving higher, breaking to the upside, and this breakout move should be a duplicate of this leg. So when you see here, up into here, when we see this leg here, up into here, this puts us again up in the $4,300-$4,400 area. Now, my cycle patterns are stating that gold is in a counter trend rally mode today. Counter trend rally mode today, this is daily, would mean that we are likely going to see some type of consolidation down in this lower area. Might get a little bit of a move higher here on a counter trend rally mode. We'll see what happens with the markets. These patterns are not 100% accurate. So we will see what happens here. But again, this is my expectation for gold. I want you to see this on a broader scale. Remember, we've had this big move from back over here, really from back over these lows, which is last year, come all the way up and roll into this flagging. I believe this is the start of a very big move, and I believe the start of this move is actually going to push us much higher. I mean, I'll be honest with you. I see a leg one and I see a leg two, about like that. So I'm really thinking that 5,200 plus area is reasonable once we get into this big breakaway flagging. And that's probably going to be through the end of this year. Okay, so let's go over here to silver. Silver is moving a little higher on the hourly chart. Gold, I'll go back here to an hourly chart. Moving a little higher right now. We'll see if this continues. Remember, if I am correct over here, then we're going to be looking at a move of gold somewhere up into the 34.50 area, really trying to come right up into this zone here. Okay, guys? And that's going to be pretty powerful in my opinion. 34.50, slight little roll, maybe into middle July, and then we take off. So we'll see how it goes, see how quick it happens. And then lastly, let's go take a look at Bitcoin. Bitcoin had a nice little rally yesterday up above this level. Now, I have my Bitcoin cycle patterns. Let me see if I have them here. I haven't really looked at them much. Yeah, here's the cycle patterns from last Thursday, Bitcoin cycle patterns. It shows today we're looking at a Harami line and then a crush pattern tomorrow, and then a reversal rally and counter trending, and then a base rally on Friday, which will still be trading. It'll be a holiday though, but still be trading. And then an inside breakaway and momentum. So the crush pattern here would indicate, and reversal rally would indicate kind of a rolling trend. Again, I still believe Bitcoin is rolling into this downward move, like I showed you here. So maybe consolidating up here and then rolling down, but I still believe we're rolling downward eventually into this trend. You can see we've got this, very clear support level running across here. This is daily. You can see we're in this downward sloping trend. I see us really moving kind of into this. You'd count it as a rally to a peak and an A, B, C, D, and then roll downward into an E. So, going to be very interesting to see how this plays out if we get that breakdown. But you've got to watch basically around the 100,000 area as a breakdown, and you've got to watch for, let's call it weakness right up here in this trend. If we get a breakdown down here below, say, 106, 600, if we get below that 106, 600 level, we're probably going to be breaking downward pretty hard. Okay. In the meantime, we're trying to beat through consolidation, upper resistance area here. We are failing below the 108, 109 area, and it looks like we're going to roll downward here. So Bitcoin typically leads with technology. So, it's about 2 or 3 days before the QQQ. If I add the QQQ here, you'll see here that, Bitcoin kind of peaks out. Well, here you can see the Qs actually rolled before Bitcoin, but Bitcoin tends to trend with the Qs. And you see here, Bitcoin rolled down, the Qs kind of topped and rolled down eventually. Bitcoin based and bottom, the Qs did, based and bottom. Bitcoin rallied, the Qs rallied. Bitcoin peaked and stalled downward, the Qs have been pushing higher. That to me means that what we're really looking at is either Bitcoin's got to catch up to the Qs to the upside, or the Qs have to roll over to catch up with this downtrend if Bitcoin collapses. So right now you've got a divergence between Bitcoin and the Qs. But again, you look at the chart here. You've got a deep low here. It's really more of a deep low here, deep low here, peak here, secondary peak here. Here's another divergence. You can see here, diverging high here, contracting high here. Kind of same thing we have here. Uh, you know, Rally high here in the Qs, contracting high over here in Bitcoin. We're getting that clear divergence, and to me, that's an indication of this type of a breakdown. Some type of a breakdown is likely to happen, like this, coming down over here, in my opinion. And this would be a good hint for you guys. You can do this. You can see the correlation between Bitcoin and the QQQs, and you can follow along with what I'm doing here, and try to keep an eye on this for yourself. Now, lastly, we'll go over here to the crash index. Crash index daily is bullish, stalling though. So remember, the markets have been pushing higher. This is the SPY down here. Been pushing higher while the crash index stalls downward. Very interesting divergent trending here. Why would the crash index be stalling while the markets are pushing higher? As I've been telling you, I think we're looking at a very disconnected, isolated market. I think we're looking at a market that's really trending on its last fumes, and that's could be a very dangerous market to us. Now, go to weekly, and you can see that we're still bearish and we're moving downward. So now the trick here is, again, S&P pushed higher all week long, and now we're starting to trend downward here. This was weekly, downward last week while we had this big push here. To me, it seems like last week was the we're going to break the all-time highs, and we're going to say we did it, and now we're going to stall out. That's what I think. And so I'm going to tell you right now, I think we'll have some carryover trending, maybe 1, 2, 3% to the upside on the SPY, maybe before we stall out, and that's the end of it. And that's what I think I want to try to impart onto you right now is that, like I said, I think this move higher on the SPY. We take a look at this. We take a look at where we're at, 617.03. We're up 3 points already with a nice big gap. I would not be surprised to see this whole thing stall out up in the 620, 624, 628 area. Like right over here, I would think that, all right, the traders are going to be exuberant, happy, wonderful, everything's good. Oops, what happened? And come back down. So again, my opinion, not saying it's going to happen. Remember, like I showed you back over here, generally we are bullish, guys. There's nothing stopping this market right now from trying to push higher. I'm just telling you that I'm seeing signs that we've hit the peak, we've hit the new all-time highs. Everybody can pat themselves on the back, and now I would be concerned of a breakdown. I would be very cautious of this has reached some sort of a peak and needs some sort of a pullback. Even a 4 to 7% pullback here would put us down right into this 575 area. That's 7.5% almost, and there's basically 4%, 4.5% puts us back down to 594. So remember, we are not out of the woods here. We've gone all this way, and we very rarely had a 4 or 5% pullback. Last big pullback we had was right down here, basically from this high down to here, 7.75%. And remember, pullbacks are pretty common. You look back over here, pullbacks are pretty common in a trend. 5.5%, 9%, really a little 3.5%, 4% pullbacks, pretty common. That last one was 3. That's 4.5%. Here's tinier ones, 3%. Consolidation, 5.5%, 7.5%. I mean, come on, guys. We've gone all this way. Really, we've climbed up. Go away. We've climbed up 28% and only had one moderate, maybe two moderate pullbacks right here. Second pullback here, about 3.3%, 3.4%. And that's really a nothing pullback. I would say that we're paused right here, like I said, to try to possibly come down and retest this gap. That's my opinion. Okay, guys, that's it for now. Happy Monday. Go get some.